Hello, this is exercise 3-12. You might notice that there was already a template for it, so I'm starting with the template. I think I might do another video creating a worksheet perhaps, but this one is already done. So, this is a December 31st of 2019. They give us some additional information, and we have to complete the worksheet, prepare the financial statements, and do the closing entries. So quite a few things to do. All right, so the first additional information. The equipment is being depreciated on a straight line basis over a 10-year life with no residual. Okay, so our equipment has a $30,000 balance. We need to do the adjusting entry for depreciation. Sorry, I'm looking to see what else, if they have a spot down for it. I'm actually just going to type it over here because I want to be able to see it. Well, maybe I can't since it's a template. So anyway, okay, but I won't write out the journal entries. All right, so if you remember, to record depreciation is depreciation expense. They have $30,000 in there, no residual, and a 10-year life. All right, so I'm going to debit depreciation expense and credit accumulated depreciation. All right, the next one, salaries accrued but not recorded, total $500. So to accrue salaries, it is salary expense and salaries payable. So here's salary expense, and it's $500. And then salary payable, they added down here on the bottom because there wasn't an account for it earlier or previously. All right, on January 1st, the company had paid 3 years rent in advance at $100 a month. So they did 3 years rent in advance, $100 a month. A year has gone by, so I need to take $1,200 out of it, and I need to move it over to rent expense. Bad debts are expected to be 1% of total sales. So I need my bad debt expense, and it's going to be, sorry about that, it's going to be 0.01 times my $45,000 in sales revenue. And in the offset, I'm debiting bad debt expense, and I would credit allowance for doubtful accounts. Interest of $400 has accrued on a note payable, so I'm going to have interest expense of $400. And then my interest payable, sorry, where's interest payable? It's down here. It had to be added in. And the income tax rate is 40% on current income, and we paid in the first quarter of 2020. So I actually have to figure out my net income. So let's do my income statement real quick, and then we'll put that in there. All right. So they have an interesting worksheet. Well, let me do formulas. All right, so this is this. This one is 7,100 plus 500. This is the same. Well, just let me copy. Yes. All right, depreciation expense is just this. Rent expense. And bad debt and interest all go there. Okay, so let's see what I have so far at this point. I usually like to do the whole column. It doesn't really matter. But then I can just copy it. Okay, so this is my income tax expense. I need to find what income is right now. All right, so I'm going to do the 45 minus the 41,350 and then times the 40% tax rate. And that does not look right. That is way too big of a number. Because I have too many. That looks more correct. All right, so if I'm debiting income tax expense, I need to credit. Well, that really shouldn't be there. That should be here. And here. All right, now let's make sure these guys add up. And I can just copy that. Those balance out. All right, I'm going to add this up again. Okay, then this is going to be my net income. So I'm going to do my revenue of $45,000 minus the $42,810. And then when I add these two up, it should equal the 45. Okay, retained earnings is going to be the 10.2. Dividends are the 1,000. Then I'm going to have net income, which needs to equal this number. So I'm going to put my beginning here. So it's that minus that. And that should make these balance out. Okay, then this ending retained earnings number, this 11,390 comes over to here on the balance sheet. So now that's my new retained earnings is over there. So it's figuring everything out for you on the same thing. All right, so let's do the balance sheet. Cash. I can just copy it. All right, this one needs to be the 300 plus the 450. Inventory is just the one number. We didn't have any adjustments to it. Prepaid rent with 3,600. And we need to subtract out the credit. Equipment just stayed the 30. Accumulated depreciation, we started with 12,000 credit, and we need to add the $3,000 credit. accounts payable, which is going to be the credit of 37. And I'm going to just drag that down. Okay, and that's where I stopped there. The retained earnings stuff we did here, and it's already over here. But we do have a couple of things down here at the bottom that you need to be sure and pull over to the income statement or to the balance sheet columns. All right, so we have salaries payable. That needs to go there. Interest payable. And income tax payable. Then add these up. Oops. What's wrong with that one? Oh, dude, okay. Oh, I just added the two numbers together. That's not right. So I got to sum it. I thought it was a summation. Sorry about that. Okay, so now let me copy that. Okay, and they balance out. So yay. I'm going to stop the video on that, and then I'll post another one finishing it off.